Welcome back to XRP Insider, your number one source for the latest XRP news, Ripple updates, institutional crypto adoption, and the biggest developments shaping the future of digital finance. Today's story is absolutely massive because XRP is once again sitting at the center of one of the most important moments in crypto history. Right now, XRP is trading around the $1.41 range, and despite weeks of market uncertainty, the asset continues to show incredible resilience while consolidating near a major breakout zone. Investors across the crypto market are watching XRP very closely because this current setup is starting to resemble previous breakout cycles that led to explosive moves in price. But what's making headlines today is not just the price action itself. It's the growing list of institutional developments, whale accumulation, ETF inflows, and regulatory breakthroughs that are suddenly creating a completely different narrative around Ripple and XRP heading deeper into 2026. Many analysts now believe the market is entering a phase where XRP could finally begin reflecting the true scale of institutional demand building behind the scenes. Over the last several weeks, one of the biggest catalysts fueling market excitement came after reports surfaced showing that UBS disclosed exposure to Ripple in a recent SEC filing. This immediately grabbed the attention of investors because UBS is not just another financial institution. We are talking about one of the largest banking organizations in the world, and when institutions of this size begin positioning themselves around blockchain infrastructure connected to Ripple, the market takes notice very quickly. Traders started interpreting this as another major sign that Ripple's technology is no longer viewed as experimental by the traditional financial system. Instead, institutions increasingly appear to be treating Ripple and the XRP Ledger as part of the next generation of cross-border financial settlement infrastructure. This is exactly the type of institutional validation long-term XRP holders have been waiting years to see. Even during periods where XRP faced price suppression and uncertainty, many investors believed adoption behind the scenes was still growing quietly. Now, those beliefs appear to be turning into visible evidence that major banking players are indeed moving closer toward Ripple's ecosystem. But that is not even the biggest story dominating conversations today. According to multiple reports circulating throughout the crypto industry, Ripple has reportedly completed a historic settlement transaction on the XRP Ledger in collaboration with JPMorgan and Mastercard. If these reports continue gaining confirmation, this could represent one of the most important milestones in XRP history. The reason this matters so much is because it suggests XRPL is now moving beyond theoretical use cases and entering live institutional banking operations connected to tokenized treasury settlements and cross-border financial infrastructure. For years, critics claimed XRP lacked real-world utility at institutional scale. However, developments like these are beginning to challenge that narrative directly. The idea that globally recognized financial giants like JPMorgan and Mastercard could be integrating systems tied to XRPL changes the conversation dramatically. It shows how blockchain technology is increasingly being positioned as a backbone for the future of banking efficiency, liquidity movement, and tokenized financial assets. This is exactly why many investors believe XRP's current price may still not fully reflect the long-term adoption potential unfolding behind closed doors. At the same time, whale activity surrounding XRP continues sending very strong signals across the market. Data from recent reports indicates that wallets holding more than 1 million XRP accumulated over 1.2 billion additional tokens during the first quarter of 2026. That level of accumulation is extremely significant because large investors usually position themselves ahead of major market shifts, rather than after the move already happens. When whales continue buying aggressively while prices remain relatively suppressed, it often suggests growing confidence that larger catalysts are approaching. Many retail investors become emotional during consolidation phases because they expect instant price explosions every single week. But historically, some of the biggest moves in crypto markets have happened after long periods of quiet accumulation, where smart money gradually builds positions before momentum returns. The fact that whales continue increasing exposure to XRP despite volatility tells many analysts that institutional confidence may actually be stronger now than at any point during the previous cycle. This growing accumulation trend is one of the biggest reasons why bullish sentiment around XRP refuses to disappear. Another major factor fueling excitement around XRP in 2026 is the enormous momentum surrounding Spot XRP ETFs. Ever since XRP officially gained commodity classification earlier this year, institutional inflows have accelerated rapidly. Current estimates now suggest cumulative Spot XRP ETF inflows have already reached approximately $1.44 billion. That is a staggering number considering how quickly sentiment shifted after regulatory clarity improved. ETFs matter because they open the door for massive pools of institutional capital that otherwise may never directly interact with crypto exchanges. Pension funds, wealth management firms, hedge funds, and traditional investors often prefer regulated investment products rather than self-custody or direct token purchases. So when XRP ETFs begin attracting billions in inflows, it creates a completely different level of legitimacy around the asset class. Many analysts believe this is only the beginning because institutional exposure to digital assets is still relatively small compared to traditional financial markets. If ETF adoption continues growing throughout 2026, XRP could potentially benefit from a steady wave of long-term capital entering the ecosystem. Of course, one of the biggest clouds hanging over XRP for years was the legal battle between Ripple and the SEC. But now, for the first time in a very long time, that chapter is officially over. The multi-year lawsuit that dominated crypto headlines has finally concluded, and many investors view this outcome as one of the most important turning points in Ripple's history. The end of the lawsuit removed a massive layer of uncertainty that had weighed heavily on XRP's price performance and market reputation for years. During the legal battle, exchanges delisted XRP, institutional adoption slowed, and many investors stayed on the sidelines waiting for clarity before getting involved. But now the environment looks completely different. The conclusion of the case is allowing Ripple to move forward without the same regulatory pressure that previously limited expansion opportunities inside the United States. Many analysts believe the market is still adjusting to what this legal clarity actually means long-term, because the removal of uncertainty alone could fundamentally reshape how institutions interact with XRP moving forward. Even more important, market participants are now closely watching the upcoming Clarity Act, which many expect to establish definitive legal frameworks for digital assets in the United States later this summer. This legislation is being viewed as a potentially transformative moment for the entire crypto industry, because one of the biggest barriers preventing institutional participation has always been unclear regulation. Financial institutions do not like uncertainty. They want clear rules, compliance structures, and legal definitions before allocating serious capital into emerging sectors. If the Clarity Act delivers stronger guidance for digital assets, it could accelerate adoption across multiple blockchain ecosystems, including Ripple's infrastructure. Many XRP supporters believe Ripple is uniquely positioned to benefit from clearer regulation because the company spent years fighting legal battles while simultaneously building institutional relationships worldwide. In many ways, Ripple survived one of the toughest regulatory periods in crypto history, and now that the environment is improving, the company may finally have the opportunity to scale more aggressively within the U.S. financial system. Another major milestone that investors are discussing heavily right now involves Ripple's banking ambitions. Ripple reportedly received conditional approval for a U.S. National Trust Bank charter from the Office of the Comptroller of the Currency back in late 2025. And by April 2026, the system became fully operational. This development is massive because it allows Ripple to offer regulated digital asset custody services directly within the U.S. banking system. Think about what this actually means for a second. Ripple is no longer simply operating as a blockchain company trying to partner with banks from the outside. Instead, Ripple is increasingly becoming integrated into the regulated financial infrastructure itself. This shift could open the door to entirely new business opportunities involving institutional custody, tokenized assets, settlement systems, and compliant blockchain-based banking services. Many investors see this as evidence that Ripple is positioning itself not just as a crypto company, but as a long-term financial technology infrastructure provider operating alongside traditional institutions. Now let's talk about the chart because this is where things are becoming extremely interesting technically. XRP has spent nearly 3 months coiling within a relatively tight range, creating what many analysts describe as a classic compression setup before a potential breakout. Price consolidation periods like this often frustrate impatient traders because momentum temporarily slows down. But historically, strong consolidations near important support levels can become launchpads for significant upward moves once resistance finally breaks. Analysts are paying especially close attention to the $1.50 level because many believe a clean daily close above that zone could trigger renewed momentum toward $1.70 relatively quickly. That is why traders are watching current price action so carefully. The market appears to be building pressure, and once volatility returns, the breakout direction could define XRP's trend for the next major phase of the cycle. What makes this setup even more fascinating is that XRP's resilience continues despite broader uncertainty across the crypto market. While many altcoins experienced aggressive pullbacks and unstable momentum over recent months, XRP managed to maintain relatively strong positioning compared to expectations. This suggests underlying demand remains active even during periods where overall market excitement cools temporarily. Analysts often say that strong assets reveal themselves during difficult market conditions because weak projects tend to collapse once hype disappears. XRP continuing to hold critical support while institutional narratives strengthen behind the scenes is one of the biggest reasons why bullish conviction remains surprisingly high among long-term investors. Many traders believe the market is quietly underestimating how dramatically sentiment could shift if XRP successfully breaks above major resistance while institutional headlines continue accelerating at the same time. Short-term expectations for May 2026 currently place XRP within a projected range between $1.40 and $1.60, according to the majority of analyst consensus models. That may not sound extremely explosive on the surface, but many traders view this range as part of a broader accumulation structure, potentially preparing for larger moves later in the year. Sometimes the most powerful rallies begin when the market becomes bored and stops expecting volatility altogether. We have seen this pattern happen repeatedly across crypto history. Assets consolidate quietly for extended periods, sentiment becomes divided, and then suddenly, momentum explodes once key levels break. XRP's current setup shares similarities with previous consolidation phases that eventually produced significant trend reversals. That is why many experienced traders are focusing less on short-term daily fluctuations and more on the broader institutional and regulatory picture developing around Ripple's ecosystem. Looking further ahead, some of the bullish long-term predictions surrounding XRP are becoming increasingly ambitious. Certain analysts believe XRP could potentially reach between $2.80 and even $8 by the end of 2026 under highly bullish scenarios. Now, obviously, those projections depend on several critical factors aligning successfully. Continued ETF inflows would likely need to remain strong. Institutional adoption would need to keep expanding. Regulatory clarity through the Clarity Act would likely need successful implementation. And broader crypto market conditions would still play an important role. But what's interesting is that these projections are no longer based purely on speculation and hype alone. Instead, they are increasingly tied to measurable institutional developments, regulatory progress, and real-world infrastructure expansion connected to Ripple's ecosystem. That distinction is important because it changes the nature of the investment narrative surrounding XRP compared to previous cycles driven mostly by retail excitement. At the same time, not everyone in the market agrees on how quickly XRP can move from here. Some analysts remain cautious because the crypto market as a whole still faces macroeconomic uncertainty, changing interest rate expectations, and broader liquidity concerns. Others argue that XRP's past cycles showed similar periods of extended consolidation before major rallies eventually materialized. This divide in opinion is actually one of the reasons why the current setup has become so interesting. Markets often create the biggest moves when uncertainty remains high and participants disagree heavily about direction. Right now, XRP appears to be sitting directly in the middle of one of those moments. On one side, you have growing institutional involvement, regulatory clarity, ETF inflows, whale accumulation, and banking integration. On the other side, you still have cautious traders waiting for stronger confirmation before becoming fully bullish again. Eventually, the market will decide which narrative becomes dominant. One thing that continues standing out throughout all these developments is how Ripple has steadily positioned itself as one of the most institutionally connected companies in the crypto space. While many blockchain projects focused primarily on retail hype cycles, Ripple spent years building relationships with banks, payment providers, regulators, and enterprise financial institutions. That strategy often received criticism during previous years because price action did not always reflect the scale of those partnerships immediately. But now, with regulatory clarity improving and institutions becoming more comfortable entering digital asset markets, Ripple's long-term approach may finally begin paying off in a much larger way. Investors who stayed patient throughout the legal uncertainty are now watching the narrative around XRP shift dramatically from speculation toward institutional utility and financial infrastructure relevance. As we move deeper into 2026, the next several months could become extremely important, not only for XRP, but for the broader digital asset industry overall. The outcome of upcoming regulatory developments, ETF expansion, institutional adoption rates, and macroeconomic conditions could shape the direction of the market for years to come. XRP is increasingly being viewed as one of the key assets sitting directly at the intersection of all these narratives. That is why attention around Ripple continues growing, despite volatility and despite ongoing skepticism from parts of the market. Whether you are bullish or cautious, it is becoming harder to ignore the scale of developments unfolding around XRP right now. And honestly, this is exactly why so many investors are paying close attention to this current consolidation phase. Sometimes the biggest opportunities appear when markets are quiet, when headlines are still developing, and when price action looks boring to the average trader. XRP sitting near this critical breakout zone while institutional momentum builds behind the scenes has created one of the most closely watched setups in crypto right now. If the market receives additional positive catalysts over the coming weeks, especially related to ETFs, institutional integrations, or regulatory clarity, many analysts believe XRP could enter an entirely new phase of price discovery that surprises a lot of people who underestimated the importance of these recent developments. So right now, all eyes remain on that $1.50 breakout level, the continued ETF inflow data, whale accumulation patterns, and the progress of the Clarity Act moving through the regulatory pipeline. Because if these pieces continue aligning the way many bullish analysts expect, XRP could be preparing for one of its most important chapters yet. And as always, here on XRP Insider, we'll continue tracking every major update, every institutional move, every regulatory breakthrough, and every market signal shaping the future of XRP and Ripple.